우리들이 살아갈 미래를 위해 푸른 숲을 기르고 깨끗한 에너지를 사용하고 바다랑 하늘을 맑게 만든대요. 우와! 누가요? KB가요.
금융을 통해 더 나은 세상을 만들어가는 KB가 저탄소 녹색 산업을 지원합니다. 미세먼지 발원지에 생겨난 숲도, 청정한 신재생 에너지도, 친환경 금융 상품도, KB는 국민과 함께 아름다운 환경을 지켜가고 지속가능한 사회를 만들어 나갈 수 있도록 묵묵히 그리고 진심을 담은 ESG 금융으로 세상을 바꾸어 갑니다.
우리 모두가 함께 그려가는 내일.
KB 그린웨이브 2030.
Korea Best Eco-Friendly Financial Group. KB Financial Group.
Take my hand as we go together down tomorrow. Take on the world for a better change. So hold my hand here today.
바다를 바라보면 정말 아름답고 파랗고 너무 좋거든요. 근데 이제 시선을 뒤로 돌려서 잘 살펴보면 바위 속에 정말 많은 플라스틱 페트병 쓰레기들이 있어요. 물고기들이 이렇게 바닷속에 떠다니는 페트병을 먹이로 착각해서 뜯어먹은 흔적을 되게 많이 봐요. 근데 결국은 그 물고기들이 또 우리 식탁에 올라온다고 생각하니까 또 되게 가슴이 아프죠. 폐 플라스틱을 이용해 원사를 만들어서 의류를 제조하는 브랜드가 나왔다고 해서 되게 반가웠어요. 완벽한 삶을 사는 사람은 없다고 생각하거든요. 자기 자리에서 그냥 할 수 있는 노력들을 하다 보면 좀 더 깨끗한 환경을 만들 수 있지 않을까 생각해요.
우리는 왜 행복할까요? 다 마신 페트병을 다시 깨끗하게 만들어 재탄생시키기 때문이죠. 제품의 생산, 유통, 판매, 회수까지. 제주개발공사와 함께 우리의 지구를 지켜요.
There's a time when we need heroes in our lives. Time is running out, we need you now. So much love that we have deep inside our heart. You can help us see it in your eyes. We can, we can, we can. Never was there such a time we need to care. Look around, it's gray, our planet's Earth. If it's one of us can go and add the voice to help our cause, then we can save the earth. We can, we can, we can. Paint the world in green, far as we can see. Singing with one voice, dancing full of joy, loving like we are a family. And give your love back to the earth. You are the one who can save the planet. We can make a difference if we can. Still holding the key to paint the colors. You can change it all, I'll be your friend. You are the hero I've been looking for. We can, we can, we can. And I'm stopping when I guess. And I'm stopping when and give your love back to the earth. You are the one who can make a difference. Can't to paint the colors. You can change it all. You are the hero I've been looking for. We can, we can, we can. We can, we can, we can. You are the hero. You are the hero. We can, we can. You are the hero.
이제 마을 사람들이 축제를 열어줄 때가 있어요. 이들이 첫 해 우리를 이렇게 만났던 반응과 몇 해가 지나고 나서 우리와 함께 이렇게 어울리는 그 분위기가 너무 달라요. 그 분위기는 그러니까 우리가 함께 이걸 이뤄냈어. 사실 이 나라 언어는 전혀 우리가 이해할 수 없는 언어고 문화도 정말 다른 문화인 거고 근데 서로 그걸 느끼는 거죠. 우리가 함께 이걸 만들어냈구나. 커피라고 다 똑같은 커피가 아니더라고요. 그러니까 정말 어떻게 컨트롤 하나에 따라서 커피 맛이 엄청나게 크게 좌지우지되고 가격이 엄청나게 변동이 되더라고요. 똑같은 1kg의 커피를 사더라도 더 고가로 팔 수 있는 커피를 사는 게 낫지 한국 갖고 와가지고 팔아봤는데 사람들이 맛없다고 다시 안 찾는 그런 커피를 사올 필요는 없는 거잖아요. 근데 그거를 이제 좋은 의도로 농장에 적용을 해보자면은 농장에서 이왕이면은 커피나무 관리를 잘 해서 좋은 퀄리티의 커피를 생산만 해준다면 우리는 얼마든지 한국에서 잘 팔 수 있는데 이게 이제 가장 기본적인 생각이었던 거죠. 우리가 실행하는 사업 지역들에 가보면 길가에 각 국가별로 해당 마을을 도와줬다는 표지판들이 엄청 많이 꽂혀 있어요. 모르겠어요. 마을 자체가 아주 막 잘 사는 것 같지는 않아. 여전히 엄청나게 무너져 있고 그래서 저 돈들은 다 어디로 갔나? 약간 이런 생각이 들 때도 있어요. 가장 경쟁력 있고 실력 있는 로컬 파트너를 찾아서 그들이 가장 잘 알고 있는 마을 사람들과 함께 협업하도록 하고 우리는 거기에서 나온 최고의 결과물, 제일 맛있는 커피를 한국에 있는 소비자들한테 판매를 해서 수익을 얻고 그거를 다시 돌아가서 농장에 재투자하고 사실 가장 중요한 서클은 우리만 있는 게 아니고 트리플래닛, 농장, 농부들, 그다음에 현지에서 항상 함께하는 파트너들이 있어요. 전문가 파트너들. 이런 구조들이 있다 보니까 서스테너블한 구조가 만들 수가 있는 거죠. 그늘나무를 심으면 커피가 더 맛있다 이런 정도만 알고 있었는데 에티오피아에 가보니까 그늘나무 수준이 아니고 완전 그냥 정글이에요. 정글. 그러니까 커피나무가 안 보여요. 그리고 거기에 있는 커피가 세계에서 최고로 비싸고 제일 맛있는 커피라고. 농장을 만들더라도 그늘나무를 한 그루라도 더 심어가지고 숲처럼 보이게 하자. 커피나무 숲, 커피 포레스트를 만드는 게 우리의 목표인 거예요. 더 많은 커피 포레스트가 만들어질수록 자연보호가 훨씬 더 많이 되겠죠. 트리플래닛한테 해외 농장 사업을 개척하는 거는 그들한테도 큰 도움이 되지만 우리가 미션을 계속 유지하고 사업을 수행하는 데에도 되게 큰 가치가 돼요. 이렇게 아름다운 숲을 이렇게 행복하고 멋진 사람들과 만들어 갈 수 있구나라는 게 우리한테도 진짜 큰 행복이 되는 거죠. 이 친구들한테 나 저번에 왔지? 나 또 왔어. 다음에 또 올 거야. 하면서 어떻게 보면은 뭐랄까 그 후견인 같은 그런 모티베이션을 좀 줬으면 좋겠다는 생각이 있었어요. 네. 그러니까 좀 더 퍼스널하게 그 형 또 왔네 약간 이런 느낌으로. 메이커 팜은 어떻게 보면은 서로 행복하기 위해서 만들어가는 사업이니까 농부들이나 우리나.
Loving our neighbors, respecting life, and making life sustainable. LOHAS. There is a company dedicated to practicing the values of LOHAS. I will only do business that serves the people and the planet. The LOHAS values of Prumuan is committed to the sustainability of our health and the planet. Prumuan will continue to innovate while practicing the principles of LOHAS. Our products and menus are made with less carbs, balanced nutrition, and world-class technology. Our consumers are enjoying vegetables and plant-based protein that are not only healthy, but delicious. We have high-tech farming operations that focus on the well-being of animals. Our effort is to maximize the use of raw, plant-based materials to respect and preserve the well-being of animals and develop products that help us live a healthier, more sustainable lifestyle. We instill the values of LOHAS in our daily lives so that people can be happy and live confidently. With every innovation, we will continue to keep our Earth in mind. Thanks to Purmuwan Institute of Technology and the principles of LOHAS, we are able to constantly innovate our positioning. Our technical institute is the first South Korean food R&D organization to get LEED Gold, a global certificate for eco-friendly buildings, a token of recognition highlighting the values and sustainability of LOHAS. Purmuwan will continue to model the LOHAS principles, shaping the world of today and the future.
승객 여러분, 페트병, 사탕수수, 유채꽃은 아이오닉 5가 될 수 있습니다. 이제 지속 가능한 미래로 출발합니다. Welcome on board, Ionic 5.
첫 주인에게 버림받던 날, 난 그리 슬프지 않았어. 버려질 수밖에 없는 나는 플라스틱 페트병이었으니까. 난 사랑받을 운명이 아니었어. 어쩌다 운 좋게 재활용 원단이 될 기회를 얻었지만 다 헛된 희망이었지. 선택받지 못해 또다시 창고에 버려졌거든. 그렇게 체념한 채 소각장의 갈라를 기다리는데 말이야. 이상하게 이런 마음이 생기더라. 누군가의 옷이 되어 사랑받는 기분, 한 번쯤 꼭 느껴보고 싶다고. 이런 날 네가 구원해줬지만 가끔은 불안한 마음이 들어. 유행이 지났다는 이유로 다시 버려지게 될지 모르니까. 너에게 부탁 하나 해도 될까? 너와의 행복이 계속될 수 있도록 나를 오래오래 입어줘. 지구를 사랑하는 당신에게, 당신을 사랑하는 옷으로부터. 리 텍스타일 by WWF.
There's a time when we need heroes in our lives. Time is running out, we need you now. So much love that we have deep inside our heart. You can help us see it in your eyes. We can, we can, we can. Never was there such a time we need to care. Look around, it's gray, our planet's Earth. If it's one of us can go and add the voice to help our cause, then we can save the Earth. We can, we can, we can.
제2차 P4G 정상회의를 서울에서 개최합니다. 국제사회와 함께 탄소 중립 실현에 앞장서겠습니다.
To turn over a new leaf, the world is gathering at 2021 P4G Seoul Summit for a brand new collaborative climate action. This year is a symbolic year. It's the first year that the world begins to take action to implement the Paris Agreement. And it's also the year of a unique opportunity to chart a more sustainable and resilient future as the world attempts to recover from COVID-19 pandemic. P4G, or Partnering for Green Growth and the Global Goals 2030, is a global initiative that aims to deliver on the Sustainable Development Goals and the Paris Agreement by facilitating innovative public-private partnerships. We invite you to the most anticipated session in the 2021 P4G Seoul Summit, the special session on green finance. To discuss the pivotal role of finance in fostering green recovery in the post-pandemic world, we have invited key figures in green finance from around the world.
Good morning, good afternoon, and good evening to wherever you are. Esteemed delegates, distinguished guests, ladies and gentlemen, a warm welcome to the 2021 P4G Seoul Summit, the Green Futures session on green finance. My name is Juyan Mari Cho, and I have been given the honor of being your MC for this session. It is indeed an honor and a privilege to be able to host such a distinguished group of delegates. So thank you once again for your attendance. Hosted by the Financial Services Commission and organized by the Korea Development Bank, the 2021 P4G Seoul Summit, the Green Futures session on green finance, is being held under the theme of the role of finance, fostering green recovery in the post-COVID-19 era. And today, the Futures session will be bringing together international experts in various different sectors to discuss the importance of green finance and also to promote the willpower of Korea to implement and revitalize green finance at home and abroad. So today, throughout the session, we'll be having global leaders from all walks of life, from the government, from the international organizations, and the private sector, and they will be sharing the new trends in green finance, as well as discussing ways to chart a more sustainable and resilient way to recover from the economic damages done by the COVID-19 pandemic. As you may know, we are broadcasting live on the 2021 P4G Seoul Summit YouTube channel. We also have a couple of our delegates here at our site, and of course, joining us online through Zoom. Well, without further ado, ladies and gentlemen, allow me to introduce the host of the evening. Chairman Eun Sung-soo of the Financial Services Commission will deliver his opening remarks. Ladies and gentlemen, please welcome him with a big round of applause.
Good evening, everyone. Good afternoon, Europe, and good morning, America. Welcome to the 2021 P4G Seoul Summit special session on green finance. The world is still in the midst of a COVID-19 crisis. COVID-19 is not an individual's problem, nor a region's or a country's problem. It is the whole humanity's problem. Likewise, climate change is everyone's problem. In this regard, P4G puts emphasis on the value of partnership across all sectors. I hope P4G Seoul Summit can induce everyone to take part in climate action. Achieving a carbon neutrality involves a fundamental restructuring of industry. This might require trillions of dollars across the world. Many countries, including Korea, have announced large-scale fiscal stimulus under Green New Deal schemes. However, public finance alone cannot cover the scale of investment we need. MDBs and the private sector investors need to get involved as well. In a different angle, a financial industry can induce companies to lessen their environmental impact by altering the lending or the investing criteria. For example, BlackRock, the world's largest asset manager, evaluates the company's ESG performance when making an investment decision. Green finance has been rapidly taking root in the global financial market over the past years. By the end of 2020, around 3,000 institutional investors have joined the UN Principle for Responsible Investment. Globally, ESG fund assets are nearing $2 trillion. Also, quarterly issuance of the green bond has risen to $150 billion. Korea is also actively stepping up effort to promote green finance. Last year, the government pledged to double the share of funding for green projects in public financial institutions by 2030. We are also planning to gradually make ESG data disclosure mandatory. During the climate summit in April, President Moon Jae-in announced the end to public financing for new overseas coal power plant. And recently, the FSC has applied to join the NGFS and announced support for TCFD. I'm sorry, I lost my script. Okay. However, there is still a long way to go. There are many obstacles hampering the progress of green finance. Among them, I would like to focus on 3 gaps today. The first is the funding gap. There needs to be continuous large-scale investment into green technology and companies. We need private capital and MDB financing. I believe the recent rise of interest in blended finance, which combines private and public finance, is grounded in concern about such a funding gap. In today's session, Mr. Berge Brande, the President of the World Economic Forum, Mr. Makta Diop, the Managing Director of IFC, Mr. Bernard Hoyer, the President of EIB, Mr. Lee Dong-geol, Chairman of the Korea Development Bank, and Mr. Kim Yong-jin, the Chairman of National Pension Service of Korea, will share their profound insight on this issue. Second is the data gap. We need to prevent greenwashing, and we need to ensure the efficient allocation of the green funding. To this end, we need accurate data on individual firms' environmental impact. More and more companies are supporting TCFD. However, actual disclosure level is not yet there. In today's session, Mr. Luis Pereira, Deputy General Manager of BIS, Ms. Mary Sapiro, Head of TCFD Secretariat, Ms. Martina Cheng, the President of S&P Global Market Intelligence, will touch on this matter. The final gap I would like to mention is the gap between developed and developing countries. At COP16, developed nations have set a goal of mobilizing $100 billion per year by 2020 to support developing countries' climate action. However, the goal has not been reached. The amount pledged to Green Climate Fund, GCF, remains around $20 billion as well. We can expect this gap to grow larger as the developing countries are lagging behind in recovering from COVID-19. On this issue, I hope Ms. Patricia Espinosa, Executive Secretary of UNFCCC, Mr. Frank Lisberman, Director General of GGGI, Mr. Yannick Glemarek, Executive Director of GCF, will provide us with meaningful insight. Let me conclude. Even if a nation successfully put an end to COVID-19, the pandemic will not be over until it is over everywhere. The same goes for climate change. Even if some countries achieve carbon neutrality, the climate crisis will not be solved if other countries keep emitting carbon. In short, global cooperation is crucial to fight the climate crisis. Korea has been sharing with the world its equipment and knowledge in preventing and controlling the pandemic. Likewise, we will continue to collaborate closely with the international community to promote green finance. Furthermore, we will actively support developing nations through partnership with international organizations like GCF and GGGI. I invite Ms. Han Jung-hye, the Minister of Environment of Korea, to share her valuable opinions regarding inclusive green transition in her closing remark. I appreciate all of the keynote speakers and the panel discussants for joining and give insight today. I hope today's session will act as a stepping stone for further global cooperation in the finance sector to achieve carbon neutrality. Thank you very much.
Thank you once again for your kind remarks, Chairman Eun Sung-soo. And he also mentioned a call for action across all sectors and industries because the time to act is now. He also mentioned the 3 different gaps that we must bridge. So thank you once again for those remarks. As was mentioned previously, this Green Future session brings together global experts, renowned experts from various walks of society, the government, international organizations, and the private sector. And we will pool in their wisdom talking about green finance as well as ways for the role of finance in seeking green recovery for the post-COVID-19 era. With that in mind, I would like to introduce some of our keynote speakers. We have 3 keynote speakers for today, and I would like to introduce our first one, which will be Executive Secretary Ms. Patricia Espinosa of the United Nations Framework Convention on Climate Change, otherwise known as UNFCCC. Ladies and gentlemen, please welcome her on the screen with a big round of applause.
Thank you for the opportunity to join you for this important discussion. The topic of climate finance couldn't be timelier. I will frame my remarks today not just through the lens of UN climate change, but more specifically within the context of COP26, which, as you know, is fast approaching and must be a success. To put it simply, finance is the common denominator for almost every issue, not only on our COP26 agenda, but overall international efforts to address climate change, especially as we build a green and sustainable recovery from COVID-19. However, we will not achieve these goals unless current financial commitments are met and new, more ambitious commitments are made, commitments equal to the climate emergency facing us. Finance is the basis of progress. It is a pillar of the Paris Agreement, and it is the foundation of trust in this multilateral process. We have seen some progress over the past few years. While we are yet significantly far from where we should be, global climate finance flows are increasing. Investment in renewables is on the rise. In this regard, let me congratulate the government of Korea for its recent announcement of public-private financing $32 billion to build the world's largest floating offshore wind farm. With cleaner power for millions, with a reduction of over 9 million tons of greenhouse gas emissions annually, and with hundreds of thousands of new jobs created, this is clearly a win-win for both the economy and the environment. On a broader front, 27 nations recently pledged to replenish the Green Climate Fund over the next 4 years. The fund, of course, is headquartered in Songdo. Despite such welcome developments, they are far from enough. The track record of developed nations honoring prior financial climate commitments to developing nations, to be candid, has been less than stellar. It was just over 5 years ago, in Paris, that the international community reaffirmed its political will to ensure that all nations have access to adequate financial resources to support their efforts against climate change. Acknowledging this responsibility, developed nations made a pledge to mobilize $100 billion annually for developing countries to support their action on mitigation and adaptation, a goal that was to be achieved by 2020. This promise, which has not yet been fulfilled, actually extends back to when I was involved in the Cancun agreements in 2010. In fact, it was one of the main elements ensuring the Paris Agreement would later be adopted. In the meantime, we hear promises about climate neutrality, about net zero, about 2050, and yet nations still haven't even kept the promises they made more than a decade ago. We cannot confidently make new pledges if past ones have not been met. We cannot break that promise made over a decade ago. It's a matter of trust. It's a matter of integrity. And we must continue to raise our ambition when it comes to financing for adaptation in developing countries, whose costs are in the range of 70 billion annually. These figures are likely to reach 140 billion or eventually up to 300 billion annually in 2030, and then range between 280 and 500 billion in 2050. In his remarks to the Climate Adaptation Summit last January, Secretary General Guterres pointed out that donor countries and multilateral stakeholders need to significantly increase the amount and predictability of their pledges. It's why he has called for 50% of the total share of climate finance provided by all developed countries and multilateral development banks to be allocated to adaptation and resilience. As the Secretary General has pointed out, adaptation cannot be the neglected half of the climate equation. And that's why the UN urges all donors and multilateral development banks to commit to this goal by COP26 and deliver on it at least by 2024. Clearly, we still have a long way to go on these and other matters. Parties cannot simply show up at COP26 and expect good things to happen. As a next step, I urge you to communicate to your respective governments and COP delegates and negotiators to do the preparatory work necessary at the virtual subsidiary body discussions taking place the first 3 weeks of June. Collectively, we must meet the adaptation commitment suggested by the Secretary General, overcome existing differences, and work towards ultimately achieving a fair and balanced agreement in November in Glasgow. Incidentally, because adaptation and resilience are tied to other important and unresolved negotiation issues, advancement here could trigger progress overall. While the finance initiative is rightly focused on the poorest and most vulnerable countries, as the 100 billion pledge clearly indicates, it is essential to develop a comprehensive approach that considers all types of finance, public and private, domestic and international, governments, multilateral institutions, private corporations, banks, investors, all must engage more actively in climate action. And civil society as a whole must demand of their governments that climate change become a central element of their financial policies and practices. This extends to the need to promote integration of climate change considerations in fiscal and financial decisions overall. Specifically, how to make finance flows consistent with a pathway towards low greenhouse gas emissions and climate resilient development. For our part, we have worked hard to engage more closely with the private sector, seeking to enhance their contribution to the global efforts for a sustainable future. For example, we are helping drive the Race to Zero global campaign, which mobilizes a coalition of leading net zero initiatives. To date, 708 cities, 23 regions, 2,162 businesses, 127 of the biggest investors, and 571 higher education institutions have signed on. Yet, much work remains if we are to succeed at COP26. Parties must fulfill pre-2020 commitments, especially with respect to submission of stronger NDCs and previous financial commitments. They must also wrap up outstanding negotiations and implement the Paris Agreement. We've been 5 years negotiating. Unleashing its full potential will not only address climate change, but help the world build forward from COVID-19. Overall, we must raise ambition on all fronts, in mitigation, adaptation, and finance. Never has global expectation and political commitment been so far apart. Current efforts are very far from putting nations on a pathway that will limit global temperatures to 1.5 degrees by the end of the century. Closing the gap between expectation and delivery will send a signal that climate change remains a priority on the international agenda. And finally, we must increase our efforts to bring state and non-state voices together to continue building climate ambition. All have a crucial role to play in the transformation that the world needs. Dear colleagues, there is no doubt that moving away from over 2 centuries of sustained economic activity, largely based on fossil fuels, will require an extraordinary effort and a change in mindset. Philosophically and in practice, we simply must move away from the long-standing approach to progress that overlooks or disregards the climate consequences of investments. There is no other option. The sobering reality is that 2021 may well be a make or break year to tackle the climate emergency. It is a year of great possibility and hope, but we don't have a moment to lose. Action now can get us back on track and secure the well-being of people and our planet. Despite the ticking of the climate clock, I remain optimistic that our climate goals are attainable. I know I can count on your support. Let us work together to build forward, build a better future, a green future, a clean future, and a future that is healthy, safe, resilient, sustainable, and prosperous for all people. Thank you.
Thank you very much, Ms. Espinosa, for the great speech. She also mentioned that COP26 is just around the corner, and so all of the parties must muster all of their policies as well as efforts. And I believe that finance has a crucial role to play. As she mentioned, finance is an overarching denominator among all of the efforts. So today, I believe in the sessions, we'll be able to find solutions. And moving on to our next keynote speaker, we also have President Børge Brende of the World Economic Forum, who has delivered his remarks. Please welcome him on the screen.
Dear Minister Han, Chairman Aung San Suu, Chairman Lee Dong-gol, distinguished participants, colleagues, and friends. I would really like to thank the Korean government for their leadership and our host organizations, the Financial Services Commission and the Korea Development Bank, for your dedicated efforts in convening this very special session on the role of finance on fostering a green recovery. It's really an honor to be with you at such an important dialogue. This year's P4G summit is taking place at a truly critical moment. You just experienced what was, along with 2016, the warmest year on record for our planet. Global average temperatures are now approximately 1.2 degrees centigrade above pre-industrial levels, and comfortably close to the 1.5 degree cap government's pledge to limit temperatures to under the Paris Climate Agreement. While emissions declined by 7% last year, according to the International Energy Agency, this reduction is likely to be a one-time dip. In other words, although our economies may have slowed over the past year, climate change, unfortunately, has not. A warmer planet, what once seemed a risk on the horizon, is now a reality. And this reality was made clear last year by record heat waves in the Middle East, stronger tropical storms in the Americas, and unusually heavy rainfall across Asia. All these devastating crises have cost communities countless lives and livelihoods. And it may be just the beginning if we don't change course. Indeed, the United Nations warned last year of an impending global food crisis, noting the perfect storm playing out between these environmental changes and the impact of COVID-19. And Swiss Re Institute forecast that global GDP could shrink by 18% over the next 30 years because of climate change. This is really a sobering picture. But thankfully, it does not have to come to pass. Today, we stand at the beginning of what we hope will be a global economic recovery. The International Monetary Fund, IMF, projects 6% global growth this year. As economies restart and societies reopen, we have the ability to shape growth so that it is as green and sustainable as possible. In this regard, billions of dollars of stimulus payments in G20 economies are going to green projects. And innovators and mission-driven entrepreneurs are working each day to unlock green opportunities. I am so optimistic by what I see, but there is so much more that needs to be done. Because unless we redouble our efforts today, unless we invest in our ambition, we will miss the opportunity to shape a more sustainable and greener tomorrow. Here I would like to offer 3 priorities for scaling our ambition for climate action. Priorities that are so important for the financial industry in particular. First, we need business, especially investment firms and financial institutions, to lead green efforts. Because financing green solutions is the key to both realizing a sustainable future and accelerating our economic recovery. According to the IEA, half of the technologies we need to help us to reach net zero by 2050 are still in the prototype phase today. And by some estimates, finding ways to make energy production more green could add 18 million additional jobs to our economies by 2030, while protecting the current 1.2 billion jobs that rely directly on a healthy and stable environment. Thankfully, the financial sector is responding. Last month, on the eve of President Biden's Climate Leaders Summit, leaders from UN agencies and US government launched the Glasgow Financial Alliance for Net Zero Emissions. This alliance brings together over 160 companies across the financial system with combined assets valued at over 70 trillion US dollars to accelerate the transition to net zero by 2050. It will offer a space for an unprecedented level of climate coordination among the leadership of financial institutions, all working together in common purpose. Congratulations. This commitment to climate action is part of a broader trend in the private sector. At least a fifth of the world's largest 2,000 public companies, many of which are World Economic Forum partners, are working to meet the net zero targets by mid-century. And these numbers are thankfully growing. The second priority must be to take an inclusive approach to green investment. Our planet can only be healthier and our global economy can only grow stronger if capital flows to green opportunities in advanced and emerging markets alike. We must finance innovations such as green hydrogen and biofuels and make these price competitive around the world. We need to eliminate what Bill Gates referred to as green premium, the additional cost of choosing green and clean technology, not just in high-income countries, but everywhere, walking the talk. This is why it was so heartening that the World Bank last month committed to be Paris compliant in its lending through its new climate action plan. There is an opportunity at the G20 finance ministers and central bank governors meeting in July to urge the entire development finance community to become Paris compliant and to work with the private sector to blend finance, structure deals, and trigger finance into emerging economies. Finally, and perhaps most importantly, we need business, government, and civil society to work hand in hand when it comes to investing in a green future. Because of our climate challenge isn't something one government, one company, or one international organization can solve on its own. It requires coordinated effort across our societies and economies. Only by having stakeholders work in partnership with one another can we develop carbon pricing mechanisms that makes low carbon technologies more market competitive, as an example. And only through deep collaboration can we ensure a carbon market is truly global and connected so that there is no leakage. This all is, of course, a lot to do, but I'm so hopeful because I see progress taking place each day. The World Economic Forum is serving as a platform for governments, businesses, civil society, and innovators to take purpose-driven action on climate change. Our alliance of CEO climate leaders, which includes leaders from the finance industry, is spearheading efforts to increase commitment ahead of COP26 and sustained action after. Governments are also showing the way. In April, President Biden pledged the US would halve its greenhouse gas emissions by 2030. President Xi Jinping pledged China would peak carbon emissions by 2030. And the EU, the UK, and other major G20 economies, including Japan and the Republic of Korea, have committed to achieve net zero emissions by 2050. And of course, the P4G summit is helping to harness the positive momentum from these commitments to ensure we meet our climate obligations. This is why I'm confident that if the finance sector continues to play a leadership role, if we focus on delivering green investment equitably, and if we commit to a multi-stakeholder approach, we can accelerate progress. On behalf of the World Economic Forum, I look forward to closely working with all of you on this important journey toward a sustainable future. Thank you so much.
Thank you very much, Mr. Brende, for the great keynote speech. He mentioned the three priorities that must be tackled. First, investment in green solutions. Second, an inclusive approach to green investment. And third, most importantly, we must all join hands together to work as one in investing in the green future. All of our speakers have said that we have much more to be done, so we look forward to more collaborations in the future as well. And now, last but not least, we have another keynote speaker, Mr. Makhtar Diop, of the Managing Director of the International Financial Corporation. Please welcome him with a big round of applause on the screen.
Allow me to begin by thanking our host for inviting me to speak at this important event and congratulate the government and people of Korea for their Green New Deal. Each of you know too well the climate challenges we face and the consequences of inaction or insufficient action. Climate change is an existential threat to our infrastructure, our economies, our communities. Severe weather events, food and water scarcity, and declining wildlife are all symptoms of the same problem. But lower-income countries, which generally emit the least, suffer disproportionately as it's the poorest, the most vulnerable, who bear the brunt of climate change, a trend that will only worsen in the years to come. But as we look towards a recovery from COVID-19, we have a unique opportunity to make climate investment that will not only unlock short-term gains like jobs and economic growth, but also deliver long-term benefits, including decarbonization and resilience. We must take advantage of this opportunity. The World Bank Group has long invested in climate solutions, even increasing financing to record levels under the height of the pandemic. We have also created standards and raised the bar through climate financing and grid certification. But there is still more we can and must do. The World Bank has committed to making certain that 35% of financing will have climate co-benefit, on average, over the next 5 years. And IFC is incorporating our commitment to low carbon development into every aspect of our business. It ensures, therefore, that everything we finance consider climate smart solutions. I know that we are not alone. We are not alone in our desire to do more. We are being encouraged by the actions from our government, private sector, and all partners, including the civil society. But gaps still remain. Although there is interest from private sector investors in climate smart projects and climate finance, there is a lack of profitable projects in emerging and developing economies. Until we address this, we will always fall short of what is expected from us. So, how do we create more projects? How do we develop more markets? One approach we are taking at the IFC is what we call upstream. Through this proactive work, we are developing and helping attract investment to private sector projects that would have not happened otherwise. Another approach is expanding blended finance. This allows us to mitigate the risk of pioneering investment and paves the way for the private sector to invest more in fragile markets, more in countries in conflict, more in the poorest countries. In both areas, we are mobilizing other development institutions to join us and are looking for partners to support these critical efforts. Because when we work together, the results speak for themselves. Consider one example from Belgrade in Serbia. We are converting a landfill where 10 million tons of waste have accumulated over 4 decades. And in 3 years, with the help of Austria, Canada, Switzerland, and the Rockefeller Foundation, the existing mountains of trash will become green space, and gas produced by the trash will be collected to generate electricity. Let's consider what's happening in Egypt, a country that relied on fossil fuel to power its towns and villages. IFC and other lenders mobilized private investment worth $2 billion to finance the Ben Bam solar park for a total of 2 gigawatts. This is impact. This is real change, and that's only 2 projects. Now, just imagine what we could achieve by combining all our expertise, resources, innovation, and leveraging it to mitigate the negative impacts of climate change. Even before the crisis, we knew that our sustainable development goals could not be achieved without scaling up private investment. Partnership between the public and private sector are key to unlocking a clean energy future. An organization like P4G and events like these are key to making that future a reality. We are pleased to join you and to be part of the climate solution. Thank you.
Thank you very much, Mr. Diop, for your kind words. He mentioned that we are not alone in our desire to do more. I believe that that is a sentence that deeply resonates with us all. And he also mentioned that when we work together, the results show for themselves, and also called for action to pool our expertise, to gather our resources, and to combine our innovation in order to tackle the climate change issues. Thank you very much once again for the keynote speeches. All of your insights and your comments show that we are making progress, albeit a little bit slowly, but we are making progress every day. And now moving on to our panel discussion for the next agenda item, I believe that our experts will be able to pool in their knowledge to discuss better ways and even more innovative solutions to tackle climate change. Under the overarching theme of the role of finance and fostering green recovery in the post-COVID-19 era, we have had the keynote sessions, and now we move on to the panel discussions. We have 6 different panelists who will be discussing 3 main subtopics. I'd like to introduce the subtopics for you. First is the climate-related financial disclosures and global marketplace for green investment. The second topic will be the role of public financial institutions for green finance. And third, the case for global cooperation on climate finance. So we will have a group of panelists from international organizations, from the government, as well as the private sector, discuss in more detail on these 3 issues. As I mentioned, we will be deep diving into a couple of these issues, so please stay with us and we'll have a heated panel discussion. Our panel discussion will be led by Mr. Frank Riesberman, the Director General of the Global Green Growth Institute. And also, we have 6 panelists from the government, international organizations, and the private sector. Allow me to introduce our distinguished guests. We also are joined by Mr. Yannick Glemarek, the Executive Director of the Green Climate Fund. We're also joined by Mr. Werner Hoyer, the President of the European Investment Bank. Also, Mr. Lee Dong-gol, Chairman of the Korea Development Bank at the Republic of Korea. Ms. Mary Shapiro, Head of the Task Force on Climate-Related Financial Disclosures Secretariat. Ms. Martina Cheng, President of S&P Global Market Intelligence and Head of the S&P Global Sustainable One. We're also joined by Mr. Kim Yong-jin, Chairman and CEO of the National Pension Service of the Republic of Korea. I'd also like to inform our distinguished panels that we provide a Korean and English simultaneous interpretation. Please use the receivers as well as the microphones placed on your tables. And with that, I'd like to hand over the floor to Mr. Dr. Reisberman of the GGGI. So, Doctor, the floor is yours.
Thank you, Mr. Hahn. Ladies and gentlemen, welcome to the panel discussion on green finance. My name, as said, is Frank Reisberman. I'm the Director General at the Global Green Growth Institute, and GGI is committed to accelerating the green growth transition in developing and emerging economies, including mobilizing green and climate finance. So it's my great pleasure to moderate this panel discussion this evening. Tonight we shine the spotlight on green finance. Of course, as we've heard already from a number of speakers, it's imperative that the world cooperate to achieve the goals of the Paris Agreement and limit global warming to 1.5 degrees. I'm very pleased that South Korea pledged to achieve carbon neutrality by 2050 last October. And I learned actually that the new Carbon Neutrality Commission met for the first time today in this same building. Of course, the critical question is, in those discussions, who will pay? Where is the money going to come from? And we are convinced that this can only happen if all parties in the financial sector, including private companies, asset managers, banks such as the Korean National Development Bank, insurance companies, institutional investors, including pension funds, asset managers, policymakers, regulators, all of them must come together to achieve those goals. Because we do need a total and rapid transformation of the energy sector. We need to ramp up renewables, we need to ramp down coal. In addition, we'll need to rethink transportation, massively introducing electricity and hopefully green hydrogen as well. The building and construction sectors need to step up energy efficiency and rethink cooling and warming, heating. We'll need all of that to enable a reduction of 45 to 50% of greenhouse gas emissions by 2030 that is in line with net zero 2050. So that is indeed a tall order for all stakeholders, not least the finance sector. And tonight we are privileged to have a set of eminent panelists from around the world in the field of green finance. First, I'd like to introduce Yannick Blemarek, the Executive Director of the Green Climate Fund. He will first present an overview of the landscape of global green finance, particularly climate finance. And GCF launched an interesting report at another P4G session earlier this week with some very interesting recommendations. I'm looking forward to hear his presentation. Yannick, the floor is yours.
Thank you very much, Frank. Excellencies, dear colleagues and friends, we have a small window of opportunity to prevent average global temperature rising by 2 degrees Celsius or more against pre-industrial level, and an even smaller window of opportunity to keep the rise to 1.5 degrees Celsius. Green investment is key to keeping these two windows of opportunities open. With $13 trillion of negative yielding debt in OECD countries and an estimated $26 trillion of climate-friendly investment in emerging markets, capital in search of higher yield should naturally flow from OECD countries to green investment in emerging markets. This is not happening. It's not happening because there are a number of policy, regulatory, technical, macroeconomic barriers to capital flows. These barriers translate into higher risk. This higher risk translates into higher financing cost. And this higher financing cost particularly affect the financial attractiveness of green investment because of the typically higher upfront capital requirement. Two approaches are being pursued in order to remove these barriers: market fixing and market shaping. Market fixing basically relies on price signal to shift finance toward climate-friendly investment. It calls on scaling up carbon pricing. It's called on fostering climate risk disclosure, and Mary will tell us more about it. It calls on developing green taxonomy. Market shaping intervenes at the level of sector policies. It includes measures directed both at the demand and supply side of green market transformation. For example, with instruments such as minimum energy performance standards, it's aimed to create a demand for low-carbon projects while simultaneously de-risking the supply of this project with approaches such as blended finance in order to crowd in private sectors. And all of you, you must have recognized a number of the terms we have heard tonight in the introductory speeches: carbon prices, carbon risk disclosure, blended finance, etc. The GCF, as mentioned by Frank, has launched this week during P4G a publication on scaling up finance. And one of the key conclusions of this publication is that these two approaches, market fixing and market shaping, are highly synergetic. Combining them together enables to remove some of the constraints inherent to each of these approaches. And so I would like to take an example about what does it mean, all these theoretical approaches and instruments for a given project, for any investor in the audience. Let's take a typical project in a high financing cost environment, the type of high financing cost environment we have in emerging markets. In such a high financing cost environment, the lower operation and maintenance cost of a green project will not be able to offset the higher upfront cost. And therefore, your typical carbon project in red will be more attractive than your low carbon green projects in green. Worse, if because the entrepreneurs is using novel technologies, novel approaches, if the project suffer cost overrun, the entrepreneur might lose the confidence of one's banker. And basically, the projects will be dropped and will never see the light of the day. That situation is not academic. That's something that is being faced every day by countless entrepreneurs in developing countries. Now, let's see the result of efforts to fix market fixing effort. Here, thanks to carbon taxes, we reduce the attractiveness of the carbon project, the red project. Thanks to climate risk disclosure, bankers can better price the investment and therefore will most likely lower the expected return, will provide a lower financing cost. So here, suddenly, it looks better. However, even if the green project here has a better cumulative cash flow, because you still have this risk of cost overrun at the beginning due to novel technologies, novel approaches, an entrepreneur might still hesitate to go forward. Now, let's use also market shaping instruments, sector policies. Here, because we have been able to de-risk the investment in the given sector, such as, for example, through streamlining licensing processes, the cost of money, the interest rate will be even lower. And if we come with financial de-risking instruments, such as development fund, that make sure that if you have a cost overrun at the beginning, your project will not be dropped. Your banker will still have confidence in you because somebody is providing some additional support for development. There, suddenly, your project, your green project is definitely the superior solution. And the two together means that your carbon taxes do not have to be very, very high. They do not have to be politically unsustainable because they are complemented by other instruments. And if, thanks to climate risk disclosure, bankers start taking into account the physical and transition risk associated with climate change, for an entrepreneurs and for a financier, the solution is, the picture is clear. The green project, the low carbon climate resilient project, becomes by far the superior solution. And so the Green Climate Fund today is the world's largest climate fund. And we support developing countries' effort to foster and scale up climate innovation and investment. And most of this effort rely on the combinations of instruments that leverage the strength of market fixing and market blending. In each case, we have to come with a unique portfolio meeting the unique requirement of each country. But in each case, we can find a solution. And from this comes my deep conviction that together, we have the skills, we have the instruments to achieve the objective of the Paris Agreement. Thank you very much for your attention. 감사합니다.
Thank you, Yannick. It sounds like we all have to become familiar with market fixing and market shaping, or in other words, some combination of carbon taxes and sectoral policies to ensure that finance does flow to those green projects. So that set the stage. Now I'd like to pose an opening question, a scoping question to the 5 remaining panelists. And the question is this: why green finance while we are in the middle of a COVID-19 pandemic, when obviously everybody wants jobs, employment? First, we have Mr. Werner Hoyer to answer this question, the president of the European Investment Bank. Mr. Hoyer.
Climate has now become the centerpiece of the political narrative everywhere. As we recover from a public health and economic crisis, we have to embrace a huge transformational process. We need to support new green technologies, new business models and skills at scale. By investing today in climate action, we will ease the pressures we will face tomorrow. At the same time, we can also help societies recover from the dramatic fallout of the pandemic and create new jobs. Investment will be at the core of the green transition. Transformation is tough. It requires societies to quickly reallocate resources and account for stranded assets. Net zero will require enormous investments and financial resources. The institutional path for the climate transition is not entirely clear. We are still piecing it together. We must join forces to develop coherent regulatory frameworks that provide clarity to the private sector. In this context, the European Union taxonomy is an important step. This will foster green finance and increase private sector mobilization.
Thank you, Mr. Hoyer. And I think you hit the nail on the head. Finance in the middle of the pandemic can flow to green projects because those green projects create more employment than the conventional fossil fuel-based alternatives. That's interesting. Actually, I think that's critical. So next we turn to Mr. Lee Dong-gul, the chairman of the Korean Development Bank. Mr. Lee, the floor.
Yeah. Mr. Lee Ji-won, 감사합니다.
Thank you, moderator. Hello, everyone. I am Dong-gul Lee, chairman of Korea Development Bank. Let me start by saying how delighted I am to join the P4G summit on green finance together with world-renowned dignitaries and experts. I hope that P4G Seoul Summit slated for 2 days will be highly successful and produce fruitful results based on today's discussion. The COVID-19 pandemic has taught us about importance of the environment and reminded us the mighty power of environment and realized that there's no second Earth. Until now, environment and growth have been regarded as an incompatible values. Prioritizing the environment would inevitably slow down growth. So we neglected eco-friendliness in order to achieve economic growth. Global economic rules are now changing. The pandemic shines even more light on the quality of life and re-evaluated global climate and environmental threats. From the economic point of view, the value of going green is also increasing. In the future, economic growth without environment consideration could offset true sense of economic gains and sustainable growth. Ignoring environment will destroy the viability of the companies. In light of this, green finance, such as responding to climate change and providing financial support for the environment, is more important than ever before. It's not something that a handful of countries or business or financial institutions can tackle alone. I believe green finance is a task that all countries, companies, financial institutions around the world must solve together. Thank you.
Thank you, Mr. Lee. I think you've set out the basic case why in the future growth must be green. Thank you. So next we turn to Ms. Mary Shapiro. She is the Vice Chair of Bloomberg Global Public Policy and Head of the Task Force on Climate-Related Financial Disclosures, TCFD. Please, Mary.
Thank you, Frank, and thank you to the Financial Services Commission and the Korea Development Bank for having me here today. It's a pleasure to participate in this discussion. In looking at the devastation caused by the COVID-19 pandemic, one can't help but draw comparisons with the devastation caused by climate change. Global efforts to recover from the economic damage of the coronavirus pandemic have provided a unique financial opportunity to set a foundation for a more sustainable and resilient future. This opportunity is further enhanced by the fact that 70% of the global economy is now covered by net zero commitments. From the TCFD perspective, we're already seeing signs of a green recovery in further pickup and momentum around the TCFD recommendations. This makes the work of the TCFD more important than ever before, as better disclosure will lead to more informed and more efficient capital allocation decisions and help facilitate the transition to a more sustainable, lower carbon economy that can withstand crises beyond climate change.
Indeed, I would say in layman's terms, if companies are forced to disclose the risk, they can no longer ignore the risk they're running by their non-green decisions. Excellent. So we now turn to Mr. Kim Jong-jin, Chairman and CEO of Korea's National Pension Service. Mr. Kim, the floor is yours.
예, 고맙습니다, Frank.
Thank you very much.
오늘 P4G
Frank.
정상회의 그 특별 세션에
It's a great pleasure to be invited to this green finance session for P4G Seoul Summit.
코로나가 이제 시작.
Last year, with the outbreak of COVID-19, our real economy and financial market was greatly shocked, and these financial markets proved to be quite vulnerable to unexpected shock. And because of COVID-19 pandemic, the climate-related risks have been emphasized more than ever before. And climate-related risks is closely related to the value of green financing. And I would like to share 3 ideas with you today. Up until now, when it comes to global climate convention and various declarations and pledges made by the global community have been exercised to fight the global climate crisis, but the progress has been slow. But from now,
the financial sector is going to be playing a very critical role through green finance. And to bring about substantial changes, green financing could play a very important role. It could mediate the process for coming out with countermeasures against the climate change. In this regard, the investment for climate change should be seen not as a cost, but as a very meaningful investment. To corporations, it could be the way to enhance sustainable future value, and to institutions and investors, it could be a mid and long-term source of high yields and profits for their investment. When all these things come together, green finance will not something that people are doing because they're forced to do, but it's something that they will mobilize voluntarily. National Pension Services of Korea has financial sustainability and environment sustainability as one of the key management investment principles. National Pension Services of Korea will pay more attention to growing green finance so that we can continue to grow in post-COVID era. And I'm sure green finance will be playing an increasingly important role. Thank you.
Mr. Kim, indeed, for pension services like yours, you don't want to be stuck with stranded assets. And as you indicated, it makes sense to invest in green investments if they are profitable investments in the future for your pensioners, isn't it? Excellent. Thank you. So finally, we turn to Ms. Martina Chung. She is President of Standard & Poor's Global Market Intelligence and Head of Standard & Poor's Global Sustainable One. Ms. Chung, the floor is yours.
Good morning, good afternoon, good evening. Thank you for the opportunity to participate, and congratulations to the Korean government and distinguished institutions organizing this event. Many assumed the pandemic would slow the focus on sustainability by years. However, we actually saw an acceleration of the sustainability agenda. Countries representing around 65% of global CO2 emissions and around 70% of the world's economy have committed to reaching net zero emissions or carbon neutrality through 2060. 2020 also brought on a series of extreme weather events that devastated communities and caused billions in damage through the past year. In 2020, the US broke an unsettling record, experiencing 22 extreme weather events and climate change-linked disasters that cost each in excess of $1 billion. More than half of the world's GDP depends on nature. With the acceleration of extreme weather events, biodiversity also became an emerging topic for governments and corporate boardrooms. We see significant growth in sustainable finance. According to S&P Global Ratings, global sustainable debt issuance is expected to surpass $700 billion in 2021, up from $500 billion from 2020. A recent IEA report recommends that equity and debt finance should flow to green sectors with a global realignment away from carbon-intensive sectors to low carbon or carbon neutral sectors and technologies. This, they say, is necessary if the world can meet net zero emissions by mid-century and the goals of the Paris Accord. The key to success of green finance will be the transparent realization of these net zero commitments supported by practical guidance and disclosure metrics. The world is in need of a green recovery, but the jury is still out on how effective spending has been. According to the UN, only 18% of recovery spending and 2.5% of total spending had positive green characteristics in 2020. Thank you, and I look forward to commenting this further during the panel discussion.
Thank you, Ms. Chung. And indeed, as somebody said, during the pandemic, unfortunately, climate hasn't taken the year off, and we have had an increasing number of serious events. So thank you, panelists, for your answers. I think now that we have set the stage for the discussion, touched on a number of things already, let's move on to assessing how the global market for green investment is today. And to facilitate green investment, as I think a few speakers have already mentioned, accurate measurement and transparent disclosure of a firm's environmental impact would be critical. Furthermore, institutional investors' leadership can shape the global market for green investment. And for this topic, we'll hear from three panelists, Ms. Shapiro, Ms. Chung, and Mr. Kim. First, Mary Shapiro.
Since the release of the TCFD recommendations in 2017, global support for the TCFD has grown enormously. For those who aren't as familiar with the work of the TCFD, our goal is to help companies and organizations disclose decision-useful, climate-related financial information clearly and consistently through existing financial reporting. Support for the TCFD recommendations has been driven by four main factors: investor demand, green recovery from the COVID-19 pandemic, regulatory developments, and good business practices. Globally, more than 2,000 organizations with a combined market cap of nearly $23 trillion have endorsed the recommendations, including nearly 1,000 financial firms responsible for assets of over $180 trillion. These financial firms include some of the largest asset managers and asset owners in the world. Support for the TCFD also includes dozens of central banks and more than 110 supervisors, regulators, and public sector entities around the world. The Network for Greening the Financial System, or NGFS, which counts the Bank of Korea as a member, and to which Korea's Financial Services Commission and Financial Supervisory Service have recently announced their intention to join, has encouraged all companies issuing public debt or equity to disclose in line with the TCFD recommendations. 11 national governments support the TCFD, and 4 jurisdictions, Hong Kong, New Zealand, Switzerland, and the United Kingdom, are making it mandatory. In Korea specifically, I'm pleased to share that we have recently had a surge in support, going from just 9 supporters in April of 2020 to more than 40 supporters, representing a market cap of more than $58 billion today. And just recently, Korea's financial authorities, including the Financial Services Commission and the Financial Supervisory Service, announced their support for the TCFD recommendations, joining the Ministry of Environment and the Korea Exchange. Additionally, a majority of policy financing institutes, including the Korea Development Bank, also recently declared support. And at the Korea National Assembly and Korea Sustainable Investing Forum, 112 financial institutions, including banks, asset owners, asset managers, insurers, and others, declared their commitment to climate change initiatives like the TCFD. With the launch of the Korean Green New Deal plan and the government's pledge to be net zero by 2050, I'm sure support for the TCFD will only continue to increase. As Korea and the rest of the world transition to a net zero emission economy, there is no company that won't be profoundly impacted by this transition. The TCFD is an important tool to help hold companies accountable for and track progress against these commitments.
Thank you, Mary. It's clear that there is considerable momentum in Korea and elsewhere to disclose risk, and that will lead to more green finance flow. So my second question to you is the following. What do you think is the importance of global reporting standardization efforts currently underway, and how can the TCFD be incorporated into them?
From the beginning, the TCFD framework was always meant to be a foundation upon which standards would be built to ensure consistency and comparability in disclosure and avoid the fragmentation that could yield less decision-useful information. Given how quickly momentum around the TCFD recommendations is moving, the support for the TCFD has shifted from purely voluntary to increasingly compulsory. As I mentioned before, governments, regulators, and standard setters like the IFRS, IOSCO, and others are embracing our work. To that end, we're at an important inflection point in terms of the inevitability of mandatory reporting across jurisdictions around the world. And the global support for the TCFD proves that the framework can be easily adapted to different jurisdictions to meet local reporting requirements. I'd like to share some recent examples of how the TCFD is contributing to the convergence and harmonization of international reporting standards. First, the proposals from the IFRS Foundation to create a new International Sustainability Standards Board, or ISSB, build upon the, quote, well-established work of the TCFD. The ISSB will also expand upon the work of the Alliance, comprised of CDSB, IIRC, SASB, CDP, and GRI, whose climate reporting prototype is based on TCFD's 4 pillars. We're proud to be a part of this effort, which was welcomed by IOSCO, the G20, and the Financial Stability Board, among others. Further to these efforts, last month we were pleased to see that the European Commission published its proposed Corporate Sustainability Reporting Directive, which will improve the flow of corporate sustainability information and build upon the TCFD's work. And in the US, Secretary Yellen noted the value of the TCFD framework for future standards on climate disclosures. In Korea specifically, the ESG reporting guidance that was published in January of this year by the Financial Services Commission recommended companies consider TCFD for their sustainability reporting. Further, the Korean Green Taxonomy will be announced later this year, providing additional clarity to ESG reporting in the country. Understanding that specific standards are unlikely to be identical everywhere, our hope is that the TCFD will continue to be referenced as an important foundation for global standard setting. These are just a few of the major milestones for the TCFD in the recent months, but they speak to how TCFD is the common thread for ensuring alignment between the many global efforts to standardize climate-related disclosure.
Thank you, Mary. Interesting to see how there is such a rapid momentum from voluntary to mandatory standards. And indeed, last year we saw the EU's Green Taxonomy published, and it would be good to see Korea's Green Taxonomy likewise. So now we turn back to Ms. Chung, again, of Standard & Poor. Ms. Chung, for finance to flow to green sectors, it will be important to then also accurately measure and appraise an individual's firm's impact on the environment and align it with net zero. How are companies currently measuring their progress in this transition, and how can that be improved? Ms. Chung?
Thank you. Well, across the board, we're seeing great momentum in sustainability disclosure. Mandatory ESG reporting requirements increased to 600 globally by the end of 2020, up from 383 in 2016 when the UN Sustainable Development Goals, or SDGs, were adopted. And almost 1,500 companies backed the TCFD reporting framework in 2020, which is 5 times the number in 2017. About 90% of companies in the S&P 500 publish sustainability reports, but only 16% have referenced ESG factors in their regulatory filings. This mismatch illustrates the opportunity to increase standardization. Further, our data also shows that companies may not be accounting for all climate risks. A 72% reduction in emissions is required to achieve the goals of the Paris Agreement. Our research shows that major global companies are on track for greater than 3 degrees centigrade warming. Moreover, we estimate that a price on carbon could result in major global companies facing as much as $285 billion in additional costs in 2025. Lastly, 80% of major US companies and 80% of major global companies will face moderate physical risk by 2050. This fragmentation is sometimes viewed as a barrier to investment, where asset managers are looking for consistent, comparable, and verifiable ESG data to make decisions. In order to effectively measure transition to net zero and other ESG factors for short, medium, and long-term risk assessment, market participants need to have accurate data. Data has been an important part of measuring transition because when you have data, you can understand the actual impact. And a critical part in attaining quality data is transparency and standardization of disclosures. We believe it is important for corporate disclosure to be comparable, reliable, relevant, and accessible. At S&P Global, we recognize that disclosure standards and the analytical work to assess and measure climate-related risks and opportunities are still evolving and maturing. It can be unclear to companies what exactly they are either being asked or required to disclose and how to disclose on climate-related matters. This often means that data that is publicly disclosed is insufficient to perform detailed, comparable, and up-to-date analysis and benchmarking of ESG performance. If we focus on driving greater harmonization of sustainability reporting, we can enable businesses and financial markets to understand the context and to make choices about how they invest according to their sustainability goals. As Mary said, the TCFD has been a powerful catalyst for the discussion on disclosure and standardization. And the recent consultation by the IFRS Foundation is another milestone at the international level. This is an area where the G20 has accelerated work through the TCFD. The G20 can coordinate a global approach through the IFRS Foundation, IOSCO, and the FSB. In March, the World Economic Forum called for the IFRS to establish a standards board and to have international securities regulators play a major role. The standards that are emerging may not be perfect to all parties. They may require some flexibility, but they will be standards. We're in the early stages of the standards game, and the playing field is still being set, but we are beginning to see the shape of the field. S&P Global has been and continues to be a part of the active dialogue between the standard setting organizations and policymakers. We need more of the private sector at the table. The good news is the capital markets are growing more sophisticated, and as markets evolve, they'll provide the private financing needed to aid the transition to net zero and fight climate change. Transition finance is a relatively new segment of the sustainable capital markets, and it's a promising area of innovation in the world's efforts to achieve carbon neutrality. This is a market with only about $6 billion in issuance so far, but there's huge potential. We think transition finance could contribute up to $1 trillion per year to the economy as companies in hard-to-abate sectors, which were previously absent from the sustainable debt market, raise capital to help them reduce their carbon footprint. Think about the potential for industries such as chemicals and aviation to reduce their carbon emissions by financing innovative and greener processes. There is not a one-size-fits-all element for policy measurement and reporting. Effectively managing ESG risks and transition to net zero requires understanding the vulnerability and resilience of each company and their respective sector. For example, climate risks vary from sector to sector because transition and physical risks from climate change do not uniformly impact companies, countries, sectors, or geographies. We believe it is essential for enhanced dialogue and coordination at the international level in order to ensure that the steps being taken on ESG matters remain in line with global market practices and regulatory frameworks. We also believe that the private sector can play an important role in facilitating this international dialogue and help minimize potential market disruption that is likely to result from diverging regulatory frameworks. Better disclosure standards will lead to more reliable ESG data, and more reliable ESG data will lead to deeper insights into a company's and into the broader global market's evolving sustainability practices. More meaningful ESG data from companies will enable issuers and users of corporate disclosure to identify, compare, and act upon ESG risks and opportunities.
Thank you, Ms. Chan. You describe a rapidly evolving market with a lot of room for further improvement and further harmonization, I think the key words. Very interesting. So we turn back to Ms. Kim. Mr. Kim? Well, Mr. Kim, as an institutional investor, you have a lot of experience in this area, of course. And the first question for you is, what role should institutional investors play in accelerating green investment?
현재까지 보면은
Up until now,
우리 환경 관련 평가 문제.
when it comes to environment-related information disclosure, the government and the international community have made various efforts.
최근에 이제 환경 분류
Recently, green taxonomy is being standardized, and the companies are now required to disclose environment-related information as a mandatory requirement. And ESG-related disclosure is increasingly becoming mandatory, and till 2030. National Pension Services is an institutional investor.
국민연금은 지난 2015년부터
Since 2015, National Pension Services has developed its own ESG evaluation mechanism, and since last year, we have reflected the result of ESG assessment in our investment decisions. And the National Pension Services environment-related evaluation system is going to be, since NPS is the biggest institutional investor in Korea, is going to set the standard for the entire financial community in Korea. National Pension Services has accumulated a lot of experience and expertise and capacity, and they will be reflected in our business, and it will be shared with the financial ecosystem in a way that it further triggers innovation to serve as a platform for further growth and evolution of the ecosystem. Of course, there's a long way for us to go, especially when it comes to environment assessment. All the institutional investors feel the difficulties because there has been a lack of information about ESG, and uncertainties or inaccuracy of the information was also a bottleneck, and sharing the information with the market participants created also a number of challenges. In Korea, the Ministry of Environment and the Environment Information Research Institute under the ministry is developing and standardizing various environment-related data and information. So by cooperating with the related institutions, we are going to make our evaluation system more sophisticated and standardize the information requirement in Korea so that ESG information and related assessment in Korea will be able to grow further in Korea. Thank you very much.
Thank you, Mr. Kim. And you told me, indeed, there was not very much information about ESG available, and you had to make yourself an expert last year. In fact, you then decided to write a book about it, which has just come out. So congratulations. If you want to know more about ESG from NPS, you can read his book. But we do also have a bit more specific question for NPS on how you are contributing to building the green markets infrastructure. And of course, in Korea, we're all curious to know how NPS can contribute to carbon neutrality in Korea. Can you give us some specific examples, please?
Thank you for your introducing my book. Thank you.
You're welcome. But I did also have a question for you. And the question was, how will NPS contribute to green markets in general, but to, of course, carbon neutrality in Korea specifically?
우선은 국민연금 같은
First of all, NPS
ESG 평가를 해오고 있고요.
has been evaluating ESG factors when we make decisions, and we are working with our corporate partners to develop various approaches and cooperation mechanisms for sharing ESG information. And when it comes to consignment fund management companies, we make sure they submit responsible reports for responsible investment. Since July last year, for certain equities in Korea, we are working with consignment fund management companies that in a way that they submit responsible investment reports, and we will be expanded to further participants next year. In selecting the consignment fund management companies, we are going to make sure they are responsible investors, and we came out with the related guideline this year, and that will be put into practice next year. Consignment fund management companies will be investigated thoroughly when it comes to their implementation and and progress for responsible investment, and the result will be reflected in their performance assessment. And security companies will also play a very important role. Security companies, they will be required to come out with corporate analysis report that reflects and includes ESG evaluation, and the performance of security companies for ESG will be reflected in their performance evaluation. ESG evaluation and Korea's ecosystem for ESG will be further promoted through NPS efforts. The critical part here is we should have the institutional infrastructure, but also active shareholder participation is really important. Up until now, NPS has been promoting shareholder activities based on governance structure, but further in the future, we are going to expand shareholder activities to environment and social activities. Thank you very much.
That's excellent. So as you, as the largest institutional investor, will take ESG factors into account and be an active shareholder, that should have a big impact on the market. In fact, I know that other banks like Mr. Hoyer's EIB in Europe, they have specific targets for how much they will invest in green. And EIB has a target to put, I think, as much as 50% of their investments into climate-related investment. Is NPS going to have a target on its green share as well?
국민연금은 이제 대표기관 투자이기 때문에
Since NPS, well, we are a universal investor.
전체 포트폴리오를 대표하는
And
다양한 자산군으로
we are investing in various asset classes around the world. And for green finance areas, we're going to expand our investment as much as possible. Thank you very much.
Wonderful to hear. So next, we turn to our second topic of tonight, and that is that public financial institutions play an important role in financing green investment, not only by directly providing the funding, but also by bringing the private investors to the table. So for this topic, we turn our attention to Mr. Hoyer of EIB that I just mentioned, and to also Mr. Lee of KDB. First, Mr. Hoyer, the EIB announced its alignment with the Paris Agreement last year. Could you explain what that means and what the EIB is doing to promote green finance? Please, Mr. Hoyer.
As the EU Climate Bank, the European Investment Bank, we have aligned all our financing with the Paris Agreement, phasing out support for unabated fossil fuels. We have set ambitious targets. By 2025, we will dedicate at least half of EIB financing to climate action and environmental sustainability. By 2030, the EIB Group will support 1 trillion euros of investment in climate action and environmental sustainability. We know a thing or two about climate financing. The European Investment Bank is the largest multilateral investor in climate action in the world, supporting a green transition both inside and outside the EU. Since 2012, the European Investment Bank has provided 197 billion of finance, supporting over 670 billion euros of investment in climate action and environmental sustainability projects. These projects reduce emissions, help people adapt to the impact of climate change, and promote environmental sustainability. In 2020, the European Investment Bank provided 24.2 billion to fight climate change. Obviously, this is not enough. Zero emissions is not a zero-sum game. We need partnerships across the public and private sectors, and finance too. We need to exchange ideas and share best practice. Unlike other great economic transitions, in this instance, the technologies are still not yet there. We cannot simply replicate and scale up existing innovation from our neighbors. No, new technologies need to emerge, grow to scale, and be attractive for developed and developing countries. This is why the EIB is committed to nurturing a clean tech innovation ecosystem and to working with partners to build from the ground up pipelines of bankable projects that will drive green innovation and green transformation.
Thank you, Mr. Hoyer. I think we have to call you the European Climate Bank if you keep on this track. That's a very impressive example, of course. Mr. Lee from KDB, could you give us your insights on the same question?
Yes, the role of the policy financing is extremely important. 2021 is the year in which the Paris Agreement under UNFCCC is to be fully implemented. In particular, April this year, Global Climate Summit was held. In May, P4G Seoul Summit is held. In November, COP26 is to be held. The global response to the global environment is emphasized more than ever before. In December 2020, the Korean government submitted Nationally Determined Contribution NDC 2030 and also Long-Term Low Greenhouse Gas Emission Development Strategy 2050 to the Secretariat of UNFCCC. This demonstrates the will of Republic of Korea to the international community that is determined to take action on climate change. The Korean government is actively transitioning to low-carbon economy in order to achieve GHG reduction target and implement its LEDs. The transition to a low-carbon economy is to change the overall economic and industrial structure. It takes much more capital input, patience, and time than entering a specific strategic industry. As massive patient capital is crucially needed, the role of policy finance is also critical. For example, in the case of offshore wind power generation in Europe, in the early stage of such projects, due to large-scale project cost and construction risk, it is known to be difficult to find private capital investment. However, European policy financial institutions such as GIB and EIB played a role of anchor investors attracting private capital and successfully leading offshore wind power generation project. Led by policy financial institution, the European offshore wind power generation project is positioned as the most representative sector where private companies and financial institutions jointly participate. In case of Korea, the green industries, including offshore wind power, hydrogen productions, and transportation, are faced with challenges such as immature market yet to be commercialized green technology, making it difficult for private capital to be invested. For areas where private sector finds it difficult to invest, high-risk assets such as subordinate debt can be provided. Private capital can be created, the market, and achieve innovation. That is true role to be played by financial institutions. For the transition to low-carbon economy, it is very important that policy financial institutions support industries that emit large amount of GHG in their carbon reduction effort. As the share of manufacturing industry high in Korea, financial support for low-carbon transition is critical. The KDB Carbon Finance Program product, recently launched by KDB, is providing financial support to low-carbon companies. While established verification system to check effect, this is expected to be standard model for carbon financing in Korea. KDB is promoting not only business development and financial support for low-carbon economic transition in Korea, but also climate change-related projects in developing countries. As the only UN Green Climate Fund accredited entity in Korea, KDB is promoting GHG mitigation and adaptation project in developing countries together with GCF. KDB will strive to achieve low-carbon transition in Korea as well as in the global economic community based on our accumulated experience.
Thank you, Mr. Lee, and thank you for mentioning indeed the active role of the Korean government. I was very impressed that there was a digital and Green New Deal, that the government committed to net zero, and that the president indeed committed to no longer fund coal internationally. Of course, we are expecting the president to still commit to a higher NDC later this year. So Minister Han and the president still have, I think, an important job to do. But first, I think my second question to you is, can you share a bit how KDB is fulfilling its role in driving the post-COVID green recovery, your contribution to the Green New Deal or carbon neutrality? Mr. Lee.
Yes. 산업은행은
Responding to changes in the economic and financial environment over time, KDB is the most representative institutional bank in Korea, and we have played a leading role in supporting the Korean government industrial policy, meeting corporate financial needs and guiding innovative growth. To overcome economic crisis caused by the pandemic, KDB has been playing a role in supporting government policies. As in other countries, the COVID-19 pandemic profoundly affected the Korean economy, resulting in a decline in economic growth and employment. Just as the United States pursued a New Deal policy to overcome the Great Depression in the 1930s, in July 2020, the Korean government announced the Korean New Deal policy to overcome the economic crisis caused by the pandemic. This is a national development strategy that focuses not only on relief and recovery to overcome the crisis, but also on reform to lead the global economy in the future. By investing around 58 trillion Korean won in green industry by 2025, Korean Green New Deal will create about 900,000 jobs and realize green recovery. As a way supporting the Korean Green New Deal policies and strengthening financial support necessary to build the essential infrastructure for the green economy, KDB implemented the Korean New Deal program for a national transformation in January 2021. Through this program, KDB plans to finance 25 trillion won in Korean Green Deal related sectors by 2025. KDB plans to create 20 trillion won worth of policy type New Deal fund over the next 5 years to invest in New Deal companies. Through the policy type New Deal fund, we shall bear investment risk partially and faithfully play the role of priming the pump to drive private investment. One of the characteristics of the policy type New Deal fund is that some of the private investment funds are raised through public participation targeting the general public. In addition, KDB is actively financing green projects by issuing green bonds and Green New Deal deposits to expand its green financing. In order to foster green industry, finance, large cooperation, and small and medium-sized enterprise must unite force and work together. KDB supports industrial finance cooperative program in the new green industries that will lead future, such as rechargeable batteries and green energy. KDB presented mutually beneficial model for large corporations and SMEs in line with green financing revitalization. Through industrial finance cooperation program, we plan to provide total of more than 14 trillion Korean won in funds to new green industries such as rechargeable batteries, semiconductor, and green energy over 5 years. In order to overcome the pandemic-imposed crisis, KDB also focused on incubation and acceleration project for green startups. Since August 2016, KDB has been hosting the KDB Next Round, the venture investment platform for startup IR events, successfully attracting a total of more than 2.4 trillion Korean won investment. The next round has been expanded and opened as an online platform, contributing to the formation of an innovative growth ecosystem by providing a channel for startup companies of more actively communicating with the potential investors. As the pre-event of the P4G special session, KDB hosted Green Pitch Day for startups engaged in green sectors on May 27 successfully. As Korea's leading policy financial institution, KDB will continue to provide various financial support to surmount challenges posed by the pandemic through revitalization of green industry.
Thank you, Mr. Lee. That's very impressive. And you made a very nice bridge also to our third topic. You mentioned that KDB is one of the accredited entities for the GCF, and you just talked about your work on techno innovation and supporting entrepreneurs. And I know that my own GGI is working with KDB to prepare a project for GCF, to have GCF and KDB work on techno innovation in developing countries as well. That's exactly the third and final topic of our panel discussion. And we'll turn back to Mr. Yannick Lemarec of GCF. And Yannick, following your presentation earlier on, could you maybe tell us a bit more about the challenges of transitioning to green finance that are obviously greater for developed and emerging economies than for countries like Korea? And what can be done to overcome these challenges and what role can GCF play? Yannick.
Thank you very much, Frank. I had the opportunity in my introductory remark to describe our overall approach. Please allow me to rebound on a comment from Ms. Chang and to further discuss the added challenge posed by the COVID-19 pandemic in order to foster climate change action in developing countries. The COVID-19 pandemic has brought us to a tipping point or a turning point in our fight against climate change. The way we recover from it will either entrench our dependence on fossil fuels or will enable us to accelerate effort toward net zero emission economies. A first challenge that we have is that, as mentioned by Ms. Chang, so far only 18% of the economic stimulus measures to recover from the COVID-19 pandemic are green. And so based on this percentage, we are more going toward the tipping point than the turning point. The second challenge that we have is that developing countries do not have the fiscal space. They do not have the monetary space that G20 countries had to finance their green economic stimulus measures. They can definitely not use the printing press in order to come up with almost zero interest rate stimulus measures. On average, the developed countries have been able to finance 17 times more than developing countries' stimulus measures per capita. And so if we want to make sure that our recovery from the COVID-19 pandemic is a turning point, a key challenge that we have is to ensure that developing countries have access to long-term, affordable capital to finance their green climate resilient recovery measures. And so within our overall approach, what is GCF doing to try to live up to this challenge? We have adopted a four-pronged approach. First, we are supporting efforts of developing countries to integrate their climate change, their sustainable development, and their economic stimulus measures. And today is a great opportunity to do it because they are in the process of updating their NDCs for COP26. And we believe that through this integration, we could actually reduce the total investment requirement by up to 40% in some sectors and dramatically increase the development co-benefits. So that's the first prong. Second prong. Mr. Lee has spoken a lot about innovation, and I couldn't agree more. And it's not surprising that KDB and GCF with GCGI are actually talking together about it. We need innovations. As mentioned by the president of EIB, a big difference with former industrial revolution is that we do not have the technologies that we need yet. We have the policies, not the technologies. In 7 of the 10 key sectors, technologies are at the emergence phase only. We have only 3 sectors where they are mature. So we need innovation. We need technological innovation. We need still policy innovation. And today, with COVID-19, we need financial innovation too. We need financial innovation such as green bond that was mentioned by Mr. Lee, such as transition bonds, such as resilience bonds, such as green guarantees or debt for climate swap to enable developing countries to finance their green economic stimulus measures without increasing their debt burden. Third, here again, in line with what was mentioned by the European Investment Bank and Mr. Lee, we need to mobilize finance at scale. And we need to take not only the viewpoint of financiers, but also the viewpoints of entrepreneurs, both the supply and the demand side. And we need to mobilize finance at scale, and for that, we need to de-risk market-creating investment. We create a proof of concept. We create a successful commercial track record. And there's market-creating projects must also foster our recovery from the pandemic. We have to prioritize the type of climate investment with huge development co-benefits in developing countries. And I'm thinking about energy efficiency, climate-resilient agriculture, ecosystem restoration and protection that are extraordinary employment-rich. And fourth, speaking still about scale, because the window of opportunity is very small, we need to basically invest in domestic financial systems in developing countries, in domestic institutions, to enable them to adopt new pricing methodologies for assets and finance the widespread adoption of the innovations that will have been proven commercially viable.
Thank you, Yannick. Well said. I think that already began a good wrap-up of the session. We are a bit over time, so we'll be very brief. But clearly, we've heard that what probably is the most interesting development in the last year, the large number of countries that have committed to carbon neutrality will need money to achieve this. And tonight we discussed what is happening around green finance. We have heard that there is a lot moving. And I think in countries like Europe, where they have an EIB that is making huge amounts of money available, countries like Korea that have NPS and KDB that can make resources available, I see a lot of progress to implement a Green New Deal and to move towards carbon neutrality. A key challenge is, as Yannick started out, money isn't yet flowing to green investments in developing countries. So we do have to follow the kind of recommendations he had to close that gap. For countries like Korea to play a leading role in Asia, to have other countries join the race to net zero. Countries like Indonesia and Vietnam that are key partners of Korea. For that, I think Korea's ODA probably would have to become a bit greener, and the parties in the green finance stakeholder group need to play an active role. Based on this panel discussion, I'm optimistic that that indeed will happen. So with that, I hope you agree with me that this was a fascinating discussion, and I hope you agree that we should thank all panelists with a warm round of applause. Thank you all.
Thank you to all of our speakers, as well as our moderator, Dr. Reisberman, for the great moderation as well. As you have heard, these panelists and moderator had discussed three main topics under the green finance and, of course, the role of finance. First of all, the global market for green investments. And then moving on, they also discussed the role of financial institutions in fostering as well as promoting green finance. And last but not least, they talked about the case for global cooperation. It's not just about the companies and the public institutions, but also the private sector as well as the civil society that has to take a part. So once again, thank you very much for a fruitful panel discussion session. I believe that all of our audiences here on site as well as online enjoyed the panel discussions. And now moving on to our next agenda item. Time does fly when you are enjoying yourself, and I believe that it's already time to close our session. However, we do have a couple more speakers planned for our session. It is bittersweet, but we do have to close. And first of all, I'd like to turn your attention to Mr. Luis Awazu Pereira da Silva, the Deputy General Manager for the Bank for International Settlements, who will also deliver some closing remarks. Please welcome him with a big round of applause on the screen.
Good day, everyone. It's really a pleasure and an honor to be invited and to speak at the P4G 2021 summit in Seoul, Korea, about the role of finance in the green recovery. The role of finance is absolutely key. It's an ongoing task, and it requires three changes in paradigm. The first change is more coordination among financial sector actors. You need, of course, the private sector, banks, asset managers, insurance companies, but also you need the public sector, development banks, international financial institutions, and of course also the central banking community that is working together in the network for greening the financial system. Why do you need more coordination? Essentially because climate change is a complex event. It requires the action of multiple actors in society. There is no silver bullet that will solve alone this issue. And because of this complex nature, it requires that governments, treasuries, central banks, the private sector, civil society work in their respective areas of expertise and action towards a common goal. The second paradigm shift is more awareness of the urgency and of the specificity of climate change related risks. On the first item, systemic risk perception, we have at the BIS contributed with a new concept, the concept of green swan, to characterize what is climate risk. At the difference of the concept of black swan used during the global financial crisis, which is an event that is very rare, it's a tale of a distribution, we think that climate change is inevitable if we don't do anything. It's a green swan because it's an event or a set of events related to global warming that are bound to happen. The only unknown is how it is going to manifestate, when exactly it is going to manifestate, and which intensity. But we are obviously seeing a lot of related weather events that can be associated with global warming, the incidence of hurricanes, the higher frequency of wildfires, and so on and so forth. So with the concept of green swan, we are trying to convey the idea that there is essentially a new type of systemic risk that can affect societies, but of course can affect the financial sector in a very catastrophic way, and we better deal with it. The second element of awareness is about the urgency to act. We are running out of time. There is a limited budget beyond which, in terms of the total amount of greenhouse gas emissions that we put into the atmosphere, beyond which the tipping point of trespassing the 1.5, 2 degrees centigrades of average temperatures will be achieved. And without action, the capacity to control the set of events that will be in motion after we cross the tipping point will be probably very damageable to all societies, to mankind, with consequences that we can perhaps foresee in a sort of accelerated version of what happened to us with COVID-19. So the budget that we have, as the IPCC, the best scientists tell us today, is about 420 gigatons of equivalent CO2 of greenhouse gas emissions into the atmosphere. And what we are doing is that we are consuming this about a rate of 10% every year without committing ourselves to drastic reductions of that. And if we don't act now, the clock again is ticking, and we will be launching a future scenario that is very complex and very difficult for mankind. So awareness about the new systemic risk concept, and awareness about the time and the clock that is ticking. The third thing that is necessary in terms of shifts in paradigm is practical solutions that are needed. If we believe that indeed the best science is telling us that it's really time to act, well, there is a very important role for the financial sector in finding practical solutions to provide the resources for the transition, for the mitigation, and the adaptation to a net zero carbon economy. And the financial sector is indeed contributing to that. Now, how? Well, in a number of ways. First, in trying to assess its exposure to these types of physical risks related to climate change. Then, second, improving the taxonomy of what is a green bond, a green financial instrument that can contribute to finance the transition. Third, in setting up, and this is the responsibility of supervisors, regulators, the regulatory direction to deal with these risks. What sort of measures in terms of prudential attitudes can we have to preserve the financial sector from these risks? The development of new financial instruments is important. What type of association between public sector and private sector can be constructed in order to help and contribute to finance the transition? The need for finance innovation, to finance research. We know that part of the solution lies in finding alternative sources of energy that are not fossil, and the engineers and the firms that are working on that require more resources. And last but not the least, the financial sector is working towards portfolio design, meaning that we have to provide a path to asset managers and also to banks and to holders of assets about what is a portfolio that is compatible with a net zero commitment that most of the governments are now taking on board. We have more than 100 governments committed to achieve net zero by a certain date, and therefore the financial sector will have to reflect upon what type of portfolio composition, asset composition is compatible with this path towards net zero, meaning that we need to achieve portfolios that evolve from the current level of relationship with average temperatures of 4 degrees towards portfolios that are compatible with 1.5 degrees, which means to think about a transition, a smooth transition, because we want this process to be conducted without triggering a financial crisis on its own. So these are difficult tasks, but they are not impossible. Moreover, they are absolutely needed. And finance can certainly contribute to make this transition a process where you have transparency, where you have participation, coordination with all the actors that I mentioned. It is a process that if we take it on board as we are doing now seriously, can be an expansionary process. There are many investment opportunities in order to achieve this transition, not in a contractionary way, but in an expansionary way with more productivity, with more green infrastructure, with more green investment, with more green research. This is, for example, a direction that is taken by the recent report of Nick Stern to the G7, asking for a significant level of investment in these green infrastructures in the future. This is also the direction that some recovery plans are taking in the US with the infrastructure plan, and also in the European Union with the new Green Deal, and also with many of the efforts that are undertaken in China and in Asia. Finally, last but not the least, it is important to think of this transition as having distributional challenge. We know that climate change affects poor countries first, and also affect poor households in rich countries first. So we need to think of a challenge in this transition to find the ways in which you will have this transition preserving social balance, preserving the poor households' income and employment in rich countries. So there needs to be a consideration for how we are going to have institutions, transfers, compensations that will enable middle-income countries, low-income countries to acquire the technology, to implement the technology, and to protect also the poorest segments in society in their own countries, but also in advanced economies where there could be also vulnerabilities. So these are not small challenges, but I think we need to be confident that with the knowledge that we have, with the technology that we can mobilize, and with the goodwill and the awareness that we have now, we can achieve that. Thank you very much.
Thank you once again. Thank you. Thank you, Mr. Pereira da Silva, for your closing remarks. You mentioned that those are not easy challenges. No, they are not easy challenges at all. However, we are working together to find a solution for it. And you also mentioned that we needed a paradigm shift in 3 different areas. First, the global coordination from the public and private sectors. Then moving on to more awareness. And of course, last but not least, having practical solutions. Thank you very much. And last but not least, ladies and gentlemen, I would like to invite Minister Han Jung-hae of the Ministry of Environment of the Republic of Korea for her closing remarks. Please give her an extra big round of applause.
Ladies and gentlemen, distinguished guests.
놓치신 분들은 정말
For some of you who have missed today's panel discussion, it's going to be very regretful. I am Han Jung-hae, Minister of Environment of Republic of Korea. I would like to congratulate you on the successful conclusion of the Green Future session for green finance of P4G Seoul Summit. As many speakers have emphasized today, we are witnessing COVID-19 pandemic, climate crisis, and carbon neutrality leading to global transition in our economy and social structure. The roles and responsibilities of the financial sector is gaining more attention than ever before. Around the world, there are keen interest in green financing initiatives such as Task Force on Climate-Related Financial Disclosure, TCFD in short, which is the flagship global initiative in the field of green finance. More than 2,000 global financial institutions are now participating in TCFD. As many speakers have pointed out today, green transition cannot be achieved by government efforts alone. All stakeholders, including financial community and businesses, must join the efforts. The Korean government is well aware of this need and pledged its support for TCFD as the 8th government in the world to do so. In addition, along with 112 financial institutions in Korea, the government has declared its participation in various international initiatives such as TCFD and Carbon Information Disclosure Project. Furthermore, the government is taking measures to prevent greenwashing and making it possible to discern genuinely green activities by introducing green taxonomy in cooperation with the financial institutions, businesses, and NGOs. We are also preparing various ESG evaluation mechanisms to fairly assess corporate environment-related activities and expanding the scope of environmental information that must be disclosed. Based on the recommendation put forward today, the Korean government will increase green financing for carbon neutrality and actively participate in international collaboration for green financing. By 2030, it's going to be made mandatory, or it could be brought forward earlier. So the Korean government will be dedicated to promoting carbon neutrality and green financing. In that regard, the Green Future session for green financing has a special meaning in that it promotes global alliance among various stakeholders. The Korean government has pledged its commitment to carbon neutrality in October last year. In just a few months, the various stakeholders have actually made a lot of progress. The Korean government and other international institutions are collaborating together in the spirit, the typical spirit of Korean people, hurry, hurry. We are also
녹색금융 특별 세션의 의미 역시 남다르다고
We should also remember that our core common goal is to overcome climate crisis and create a sustainable financial ecosystem and introduce inclusive green recovery so that no one is left behind in the process of achieving carbon neutrality. It has to be a common goal for all mankind, and we should always remember that. I would like to extend my gratitude to Chairman Eun Sung-soo of Financial Services Commission for hosting this special session. And FSC is actually jointly carrying out various projects with the Ministry of Environment, and FSC is a very reliable partner for our ministry. I would like to thank Executive Secretary Patricia Espinosa of UNFCCC, President Borgen Brende of WEC, Managing Director Magda Diop of IFC, Executive Director Yannick Lamarek of Green Climate Fund for their insightful presentation. Regarding the comments about carbon tax, the Korean government is going to introduce carbon trading system, and we are still seeing some opinions about carbon tax, and the government is carrying out research project so that we can have a proper relationship between the carbon tax and carbon emissions trading system, and we also need to prepare enough financial resources for green financing. Also, my appreciation goes to President Werner Hoyer of the EIB, Chairman Lee Dong-gul of Korea Development Bank. And as Secretary General Rex Berman has said, he referred to Korea Development Bank. And I'm not sure whether it was intentional or just a mistake, but Dr. Rees Berman called it Green Development Bank. I think that's exactly what KDB stands for. For public financing these days, we need financing for green development. So I think Dr. Rees Berman has called KDB, Korea Green Bank, intentionally with the wish to spread green financing further in Korea. And green transition is going to change our manufacturing industry, but it would require a huge amount of financial support. So at the lowest possible rate, we are going to create a program that will provide the financing at the lowest possible rate. And I would like to thank Chairman Lee Dong-gul of Korea Development Bank for helping us along the way. And this will brighten and ease our road to green financing. And I would like to thank Head of Secretary Mary Shapiro of TCFD, President Martina Cheng of S&P Global Market Intelligence, and Chairman and CEO of Kim Young-jin of National Pension Services for their enlightening comments. And NPS has said that they will no longer invest in new coal-related projects. So NPS is truly going to base its investment decisions on ESG-related principles. So I'm sure there will be a lot of changes very quickly. All of this, also my deepest gratitude goes to Director General Frank Rees Berman of GGGI for flawlessly moderating today's discussion, and Deputy General Manager Luis Pereira of BIS for superbly concluding today's session. And this is late at night in Korea on a Saturday night. I would like to thank you again for sharing your precious time with all of us today. The Ministry of Environment will be cooperating with you along this journey.
Thank you once again, Minister Han, for your great and sincere closing remarks. Thank you once again. Ladies and gentlemen, this brings us to the close of the 2021 P4G Seoul Summit, the Green Future Session on Green Finance. Once again, thank you for your participation at home and abroad. The overarching messages was that there is no silver bullet, there are no one quick fixes, but we must act now and we must act together. So with that, ladies and gentlemen, we will close. Thank you once again for your participation, and goodbye. Thank you.
제2차 P4G 정상회의를 서울에서 개최합니다. 국제사회와 함께 탄소 중립 실현에 앞장서겠습니다.
첫 주인에게 버림받던 날, 난 그리 슬프지 않았어. 버려질 수밖에 없는 나는 플라스틱 페트병이었으니까. 난 사랑받을 운명이 아니었어. 어쩌다 운 좋게 재활용 원단이 될 기회를 얻었지만 다 헛된 희망이었지. 선택받지 못해 또다시 창고에 버려졌거든. 그렇게 체념한 채 소각장의 갈라를 기다리는데 말이야, 이상하게 이런 마음이 생기더라. 누군가의 옷이 되어 사랑받는 기분, 한 번쯤 꼭 느껴보고 싶다고. 이런 날 네가 구원해줬지만 가끔은 불안한 마음이 들어. 유행이 지났다는 이유로 다시 버려지게 될지 모르니까. 너에게 부탁 하나 해도 될까? 너와의 행복이 계속될 수 있도록 나를 오래오래 입어줘. 지구를 사랑하는 당신에게, 당신을 사랑하는 옷으로부터. 리 텍스타일 by WWF.
우리들이 살아갈 미래를 위해 푸른 숲을 키우고 깨끗한 에너지를 사용하고 바다랑 하늘을 맑게 만든대요. 우와! 누가요? KB가요.
금융을 통해 더 나은 세상을 만들어가는 KB가 저탄소 녹색 산업을 지원합니다. 미세먼지 발원지에 생겨난 숲도, 청정한 신재생 에너지도, 친환경 금융 상품도, KB는 국민과 함께 아름다운 환경을 지켜가고 지속가능한 사회를 만들어 나갈 수 있도록 묵묵히 그리고 진심을 담은 ESG 금융으로 세상을 바꾸어 갑니다.
우리 모두가 함께 그려가는 내일.
KB 그린웨이브 2030.
Korea Best Eco-Friendly Financial Group. KB Financial Group.
Take my hand as we go together now. Tomorrow, take on the world for a better change. So hold my hand here today. As we just hold my hand here today.
바다를 바라보면 정말 아름답고 파랗고 너무 좋거든요. 근데 이제 시선을 뒤로 돌려서 잘 살펴보면 바위 속에 정말 많은 플라스틱 페트병 쓰레기들이 있어요. 물고기들이 이렇게 바닷속에 떠다니는 페트병을 먹이로 착각해서 뜯어먹은 흔적을 되게 많이 봐요. 근데 결국은 그 물고기들이 또 우리 식탁에 올라온다고 생각하니까 또 되게 가슴이 아프죠. 폐 플라스틱을 이용해 원사를 만들어서 의류를 제조하는 브랜드가 나왔다고 해서 되게 반가웠어요. 완벽한 삶을 사는 사람은 없다고 생각하거든요. 자기 자리에서 그냥 할 수 있는 노력들을 하다 보면 좀 더 깨끗한 환경을 만들 수 있지 않을까 생각해요.
우리는 왜 행복할까요? 다 마신 페트병을 다시 깨끗하게 만들어 재탄생시키기 때문이죠. 제품의 생산, 유통, 판매, 회수까지. 제주개발공사와 함께 우리의 지구를 지켜요.
마을 사람들이 축제를 열어줄 때가 있어요. 이들이 첫 해에 우리를 이렇게 만났던 반응과 몇 해가 지나고 나서 우리와 함께 이렇게 어울리는 그 분위기가 너무 달라요. 그 분위기는 그러니까 우리가 함께 이걸 이뤄냈어. 사실 이 나라 언어는 전혀 우리가 이해할 수 없는 언어고 문화도 정말 다른 문화인 거고, 근데 서로 그걸 느끼는 거죠. 우리가 함께 이걸 만들어냈구나. 커피라고 다 똑같은 커피가 아니더라고요. 그러니까 정말 어떻게 컨트롤 하나에 따라서 커피 맛이 엄청나게 크게 좌지우지되고 가격이 엄청나게 변동이 되더라고요. 똑같은 1kg의 커피를 사더라도 더 고가로 팔 수 있는 커피를 사는 게 낫지, 한국 갖고 와가지고 팔아봤는데 사람들이 맛없다고 다시 안 찾는 그런 커피를 사올 필요는 없는 거잖아요. 근데 그거를 이제 좋은 의도로 농장에 적용을 해보자면은, 농장에서 이왕이면은 커피나무 관리를 잘 해서 좋은 퀄리티의 커피를 생산만 해준다면 우리는 얼마든지 한국에서 잘 팔 수 있는데, 이게 이제 가장 기본적인 생각이었던 거예요. 우리가 실행하는 사업 지역들에 가보면 길가에 각 국가별로 해당 마을을 도와줬다는 표지판들이 엄청 많이 꽂혀 있어요. 모르겠어요. 마을 자체가 아주 막 잘 사는 것 같지는 않아. 여전히 엄청나게 무너져 있고, 그래서 저 돈들은 다 어디로 갔나? 약간 이런 생각이 들 때도 있어요. 가장 경쟁력 있고 실력 있는 로컬 파트너를 찾아서 그들이 가장 잘 알고 있는 마을 사람들과 함께 협업하도록 하고, 우리는 거기에서 나온 최고의 결과물, 제일 맛있는 커피를 한국에 있는 소비자들한테 판매를 해서 수익을 얻고, 그거를 다시 돌아가서 농장에 재투자하고. 사실 가장 중요한 서클은 우리만 있는 게 아니고 트리플래닛, 농장, 농부들, 그다음에 현지에서 항상 함께하는 파트너들이 있어요. 전문가 파트너들. 이런 구조들이 있다 보니까 서스테이너블한 구조가 만들 수가 있는 거죠. 그늘나무를 심으면 커피가 더 맛있다 이런 정도만 알고 있었는데 에티오피아에 가보니까 그늘나무 수준이 아니고 완전 그냥 정글이에요. 정글. 그러니까 커피나무가 안 보여요. 그리고 거기에 있는 커피가 세계에서 최고로 비싸고 제일 맛있는 커피라고. 농장을 만들더라도 그늘나무를 한 그루라도 더 심어가지고 숲처럼 보이게 하자. 커피나무 숲, 커피 포레스트를 만드는 게 우리의 목표인 거예요. 더 많은 커피 포레스트가 만들어질수록 자연보호가 훨씬 더 많이 되겠죠. 트리플래닛한테 해외 농장 사업을 개척하는 거는 그들한테도 큰 도움이 되지만 우리가 미션을 계속 유지하고 사업을 수행하는 데에도 되게 큰 가치가 돼요. 이렇게 아름다운 숲을 이렇게 행복하고 멋진 사람들과 만들어 갈 수 있구나라는 게 우리한테도 진짜 큰 행복이 되는 거죠. 이 친구들한테 나 저번에 왔지? 나 또 왔어. 다음에 또 올 거야. 하면서 어떻게 보면은 뭐랄까 그 후견인 같은 그런 모티베이션을 좀 줬으면 좋겠다라는 생각이 있었어요. 네. 그러니까 좀 더 퍼스널하게 그 형 또 왔네 약간 이런 느낌으로. 메이크팜은 어떻게 보면은 서로 행복하기 위해서 만들어가는 사업이니까 농부들이나 우리나.
Loving our neighbors, respecting life, and making life sustainable. LOHAS. There is a company dedicated to practicing the values of LOHAS. I will only do business that serves the people and the planet. The LOHAS values of Prumuan is committed to the sustainability of our health and the planet. Prumuan will continue to innovate while practicing the principles of LOHAS. Our products and menus are made with less carbs, balanced nutrition, and world-class technology. Our consumers are enjoying vegetables and plant-based protein that are not only healthy, but delicious. We have high-tech farming operations that focus on the well-being of animals. Our effort is to maximize the use of raw, plant-based materials to respect and preserve the well-being of animals and develop products that help us live a healthier, more sustainable lifestyle. We instill the values of LOHAS in our daily lives so that people can be happy and live confidently. With every innovation, we will continue to keep our Earth in mind. Thanks to Prumuan Institute of Technology and the principles of LOHAS, we are able to constantly innovate our positioning. Our technical institute is the first South Korean food R&D organization to get LEED Gold, a global certificate for eco-friendly buildings, a token of recognition highlighting the values and sustainability of LOHAS. Prumuan will continue to model the LOHAS principles, shaping the world of today and the future.
승객 여러분, 페트병, 사탕수수, 유채꽃은 아이오닉 5가 될 수 있습니다. 이제 지속 가능한 미래로 출발합니다. Welcome on board Ionic